Hey, welcome back, everybody, to the Financial Advisors Workshop. This is the show where we interview and talk with financial advisors all across America, how they do their business and how they work with investors and how we serve the public. And so today we have Meghan Railey. Meghan's in Texas via California. And so we're going to have a conversation with her. Welcome, Meghan.
Thank you so much for having me today. Yes.
We're proud to have you here today. And you've built a really great business with your senior partner, Friss. You were the junior partner, but that's all kind of growing and developing. So give us a little bit about your background, if you could, and then we'll learn more about your firm.
Great. Yeah. So I started and met Fritz actually in 2008. So perfect timing right in the midst of the worst financial crisis in history. Uh, and I started right out of college as a finance major. At that time, I was really lucky actually because, 2006, 2007 was still a very um, positive time for the economy, for leading into 2008. And I was able to secure a training associate position at UBS Financial Services. So, this is foreign times to a lot of young advisors, but they used to run big classes of training programs through the financial services industry. And what they did was they hired a bunch of college graduates and would put us through a program. They'd introduce us to advisors, they'd run us through management programs, they'd do rotations and introduce us to the industry, which, it's sort of lost at this point, which is
Right.
a shame. But, that's how I started. However, the twist on that story is that, as soon as I showed up in July of 2008, the market cratered, and the financial services industry effectively turned upside down. There was it was anyone who went through that time, it's probably a bit of a blur, also a vivid PTSD memory. But, there were advisors that, could no longer stay in business. There were firms that could no longer stay in business. But what was real in reality, what people were doing is there was a lot of movement between firms. So, what happened with my story is, I went into this industry thinking I was going to learn how to be some type of role in the industry, whether it's an advisor, analyst, manager, something. And what actually happened is I showed up and I just became a problem solver for all the advisors in the San Francisco region branch. Um, so I was lucky in that I got into this training program and I got into a hub, real hub of a branch and had access to a lot of different information and people right away. And so what was happening was I navigated sort of maintaining my job and role throughout the time. They canceled my training program, but kept me on board. And part of that was because I was helping with this transition between, firms with the different advisors that were transitioning. So I got really good at navigating that process, and helping guide advisors through that process. All throughout this time, I mean, it's a very, very rapid movement of events. I sort of realized that I needed to do something to have a little more job security long term. And so since I had access to such high level and high skilled advisors, in the flagship San Francisco office downtown, I made friends with a few of the advisors and started to figure out which ones might want to be interested in having a junior partner. At the time, Fritz, my current long-term business partner, was, in thinking about expanding his practice, needed some additional help, was willing and young enough at the time, had enough energy to have interest in training and developing our talents together. And so, endless story short, we decided to team up, so to speak, at the end of 2009.
Mhm.
Well, at the end of 2009, things started to look pretty grim for UBS. They had some trading blunders, to say the least.
Yes.
It was a foreign-owned it was the US arm of a foreign-owned bank. There was a risk that they would actually not have their wealth management arm in the US long term. And so Fritz thought we should move firms, which, lucky for him, I already helped a number of advisors transition. So it was a really good match for the two of us right off the bat because I could be helpful, right? I couldn't be helpful to him per se to provide advice and guidance right away to clients, but I could be helpful in helping him accomplish some goals for the practice. And so we moved to Wells Fargo Advisors in 2010, which at that time, Wells Fargo was was them and JP Morgan were the best banks on the street. And JP Morgan, I think their wealth management arm at the time was Bear Stearns, which was not a great brand for us to move to, given that UBS was already having some trouble. So, it's been a really fun ride so far. All of that background really is about us. In this whole time, amongst moving firms and building the practice, we've built and designed a practice, for our clients. So we are, during this time, when I met Fritz, he had about 130 million under management. We now have just shy of 700 million under management. And all of that has been built organically from current client referrals, clients going through liquidity events. Our main focus and our core clients are all first generation wealth, all young, all either early employees, founders, or executives of companies who had stock or ownership percentages that ended up getting liquidity.
So it's been about 15 years, 16 or so, maybe 17, since you've gotten into the business. And the original first couple of years were pretty rough. And but then you've seen some great times too, haven't you? I mean, we've had some really good markets too.
Yeah, I mean, I think all markets, all economic environments provide opportunity, and that I think that's where we shine with clients, and as us personally as humans, I think we try and figure out, okay, we're in an awful time, okay, we're in a great time. If we're in an awful time, where's the opportunity? If we're in a great time, where's the risk? And that's I think why our clients stick with us. Is we always have perspective. And we're never just trying to accomplish one thing. We're looking at everything. Where are the risks? Where is the value? What can we be doing better? How can we be running portfolios more efficiently? How can we focus on taxes more? Where is the real alpha these days is what sort of the how we think about it philosophically.
Exactly. Well, good. So tough times, good times. So in a sense, it's better you started in a rough time, because if you make it then you can make it anytime, right? So
that's what I like to think. That's how I like to think about it.
absolutely. Well, good. And then that's also a corollary to how we have to deal with clients too. Clients are going through a very difficult time. And, what was your feeling back then as you started to get to know investors and you were helping develop into the business? What was your experience back then about how clients react to rough times?
My experience with clients has really evolved over time, and how I understand how they think. Back then, it was quite chaotic. And, the bad experiences that I either witnessed or experienced with clients together is, clients selling at the wrong time and just never, ever getting back in. And that was something that has always stuck with me. Like, how do we position mindset and portfolios from the very beginning to try to almost at all costs avoid that? And, that's really the art of this business. It's not the science. The science is almost easier than the art. It's like, how do you make sure that the story that the clients believe in and And how do you make sure they understand enough about their portfolio and their investment and, the implementation of their investments and their financial plan? How do they know enough to believe in it long term? It's been the thing that has stuck with me for the longest time. The other thing on the positive side that I've experienced over the last 16 years is that, if you really do implement correctly, if you really do build the relationship from the beginning correctly, the market is never just topic of discussion. Performance becomes something that's only talked about every 5 years, even though you have to talk about it. And even though we do review it, it becomes less and less important to the annual meetings, to the quarterly meetings. It's more about, are we accomplishing what we set out to accomplish? What is our, if it's a tax mandate, if it's a, fund different goals mandate, if it's make sure that I can sleep at night mandate, whatever the mandate is, like how do you get to that? And what I found is some people have, emotional mandates, and other people just have a number.
Right.
Like what is the portfolio at? Am I above my number or below my number, or am I close? Or some of the other numbers that have become magic numbers, or what's the number I need to get to work on my own terms?
Right.
Where I need to get to take care of my parents. There's a lot of different numbers out there. And, being able to not
Yeah.
worry about where the S&P 500 is, but where your specific number is.
Okay. Excellent. So you went to Santa Clara University and you were a California gal. And now you're in
Right.
Texas. Tell us about that.
Yeah, that's been a transition. Yeah, I born and raised, or not born. I was born in South Carolina, actually, raised in California, and transitioned to Austin, Texas in 2020. So we were COVID movers, which has been fun. It's also been, I've had a history of sort of following growth in my life. I've always tried to find somewhere where I could thrive and grow. And so that was really, part of the impetus for move is Austin was fast growing. It slowed a little bit recently, but it's still very much fast growing, young town. Our clients are relatively young. That it seems like a lot of that has shifted a little bit out of San Francisco into more into different regions, that where they can grow as fast as you used to be able to grow in San Francisco. And so it's been a great move. Great for the business, great for my personal family. I have 3 young kids, so they got a lot of space out here, where we're a little space constrained in the San Francisco Bay Area.
Yes, for sure.
Mhm.
Well, good. So, and are the people in Texas different than the investors in California? You've seen any difference there?
Not really. Um, Austin, I this is gonna be controversial, but Austin and San Francisco are sort of similar in
Yeah.
from a cultural perspective,
Mhm.
pretty moderate from a political policy perspective,
Mhm.
and, very innovative, um, very artsy. So like the culture is not that different. So I haven't found much difference other than the weather, which
Right.
I happen to love personally. I like the hot weather.
The hot weather in Texas. Okay. Right.
Yeah.
Well, good. Well, so again, you started in a very tumultuous time. You saw the markets reeling. So now, as you do your CFP, as you do financial planning, you set up portfolios that include, growth assets and safe bucket type assets. Do you work with alternatives as well?
Alternatives have always been an area where we don't have a huge focus. If we invest in alternatives, it's because there's a mandate. We're looking for something specific. Someone wants to have real estate exposure, but doesn't want to own, the real asset. A lot of our clients are wealthy enough that they have their own real estate portfolios, like direct investments. So we don't really need to go and find LP shares for them. Um, Also, our clients, given their personal networks, find plenty of venture angel, seed funding opportunities, that we will look at with them, help them vet, but ultimately they have greater resources for a direct investment. And the yield on investment when those work out is, much larger when they go direct. So, we've seen them have a lot of success just doing the way we think about it is if they want us to bake it into the plan, we'll just come up with an allocation for that and just help them allocate it through their networks.
Interesting. Well, what else do you add to portfolios then? If not too much alternatives, how do you design portfolios?
Our real alpha or, focus inside of portfolios is tax efficiency. So we are okay being direct indexed, where it makes sense, because we can add a lot of efficiency from a tax loss harvesting perspective. We use for some of our larger clients, we have a very interesting tax loss harvesting strategy, which is a 130-30 long short strategy, where the long short piece, extension we call it, actually consistently generates tax losses, whereas a long only tax loss harvesting strategy times out at some point. So the tax alpha is really where we find a lot of leverage for our clients. It also allows us to rebalance in a tax efficient way. So our goal is to have the design portfolios that keep the most dollars inside of the portfolio long term, net of tax. And so, again, tax planning has really been a core focus of our entire practice from day one, because the practice started and was founded with semiconductor executives, and so in a time where equity compensation was brand new. So still today, it's very hard to figure out what your AMT preference item is for ISO options. People still call us for the tax planning, like what options should I exercise and when is still the consistent phone call that we get from client referrals. But throughout the entire life of the practice, tax planning has just grown and grown over time. How do we keep the most money in our pockets?
So as tax planning is a big focus for you, do you get involved in other areas of financial life besides just the securities?
Absolutely.
A little bit about that. Great.
We do. For our top 5 to 10 clients, I called out 5 to begin with. We actually act as, in the controller capacity for some of them. So we are involved in their day-to-day bill pay. We are involved in, a lot, what I would say, they are our multifamily office clients. So we're helping them with entity management, LLC structuring, the tax filings for that. We have 2 enrolled agents on staff that help us with the actual tax compliance now. We take custody of clients' assets for bill pay purposes, not to run proprietary funds, but we actually do take custody of clients' assets and help them manage their day-to-day cash flow on their behalf.
Okay.
So we're very much in full service for a handful of our clients.
And since you do tax work, are you involved with real estate and real estate trusts as well? Do you do legal work also?
We do. We don't actually draft any legal documents, but we will consult on a lot of legal work. We also have a couple clients with privacy concerns. So, I will actually act as the manager of their LLCs. And when we buy personal real estate or real estate investments, I will actually complete the transaction on their behalf so that their name's never associated with a property or an address. So we do a lot of concierge financial operations.
Very good. Well, good. So what are you seeing out there? What do you think about the markets at this point and in the investing environment that we're in?
Oh, well, honestly, it's a little bit of a scary time. I mean, it feels almost too good to be true some days. Stocks are screaming, bonds have recovered. Nobody knows which way interest rates are going. And economic data seems conflicting at times.
Yeah.
I think that the risk areas that we're paying attention to is, of course, the election this year. Um, we are also paying attention to real estate very closely. I think given that interest rates haven't moved much, wondering if residential will, it seems like residential has paused a little bit, wondering if that will come back to life. Commercial is definitely an area that we've paid a lot of attention to and wonder what the long-term effect is going to be, given lower usage. Are they going to convert space? You know, San Francisco, coming from San Francisco, it's also just a very high interest point for us because San Francisco has changed so much throughout the COVID, post-pandemic. Wondering what's going to happen with some of the metropolitan cities.
Yes. And so tell,
I wish I had a crystal ball. It seems like it seems like what's actually happening is that the market's kind of climbing a wall of worry right now. So, you know, that feels like the time that we're in. Who knows if I'll be right or not.
so you think much of the problems with San Francisco are solvable?
Oh, I don't know. I think somewhat, at San Francisco, I've been a long time resident of San Francisco area.
Mhm.
They don't have as many problems as the media says, but it seems like they're in a cycle that they haven't been in for a very long time. So, the people who have lived through a cycle like this, like my generation doesn't know times like this in San Francisco. So I think it's still a beautiful city to live in. There's still a lot of wealth generation there's a lot of wealth there still, and there's a lot of opportunity, and it's really hard to argue that San Francisco is going away in terms of a value area. It still has a lot of investment.
Oh, yeah, absolutely. Well, okay. So, what do you see about the future for America's financial markets and how investors can relate to that? What do you see there?
Say the question again. Sorry, I missed the beginning.
The future for investors. What do you see going forward?
Future for investors. I think the future for the industry is that there's so much talk right now about AI and how AI is going to replace humans. I think for our industry and for investors, AI is going to highlight humans in this industry because, but AI is going to make our job hopefully more, actually delivering our job more efficient. I think, being able to have more virtual assistants in different areas, being able to answer non-emotional questions, fact-based questions a lot faster, and a lot more automated. I think it's going to be a real game changer to our business. And I think we've been seeing that over time. We've seen fee compression, we've seen better tools, we've seen better technology. In fact, when Fritz and I moved firms in 2010, going independent was not as accessible to us back then because we'd have to have servers and we'd have to, the technology was not as robust. We started the firm in 2019 with software as a service for just about every tech platform that we were, or, our tech stack was predominantly software as a service. So, the technology has really upgraded our client experience, and I think it will continue to upgrade the efficiency of our client experience. However, I do not ever see a time where in times of hardship, in tough markets, in family tragedy, in family transition and life events, someone be like, yes, I want to talk to a robot online about how I'm feeling right now.
Mhm.
I think it's going to highlight how much of a trusted advisor we are to people in their day-to-day lives.
Yes, and I think there's a human element to our industry and clearly to the work you do that I don't think that AI will ever take the place of. So I'm glad you see that as well. So I could tell that we're getting more efficient tools and math and everything, but there's still got to be an advisor involved, isn't there?
Let me give a good example that I use a lot. Like telehealth has been really helpful and great for access to healthcare advice and guidance and solutions. If you have strep throat, just being able to do a telehealth visit and get antibiotics is really efficient. Like, don't kill half a day to go get antibiotics, right? So if you want to make a Roth IRA contribution, we can just use AI in the future
Yeah.
to have that conversation or exchange those emails, and then like the whole workflow takes off from the time you say yes, right? Now
Mhm.
now your prescription's in, now your contribution's made. But if you're having a baby, if you're pregnant, if there's a lot of decisions to make for the next 9 months, you don't really want to do telehealth the whole time. I have
Mhm.
three kids. I've been pregnant 3 times. It's
Mhm.
every time there were times throughout that 9 months that I wanted to go see somebody and talk to them about what I was supposed to be expecting next during this process,
Mhm.
and that I think that's something that's never gonna change. Nobody's ever gonna wanna have a baby with talking to a computer screen.
Right, exactly. That's a great perspective because everyone's getting so excited about AI, and I'm like, well, it's only a computer still. You just have to be careful. Well, great. Well, good. So, how within your practice, you have obviously some key clients, and you mentioned a couple of them. Your top 2 clients. How did you find your top 2 clients between you and friends?
They were referrals from one of them was a referral from an existing client and the CEO of the company that he founded.
Mhm.
And then the other one was also a founder and a referral from the first client I mentioned. So they're very connected. Um, and we were just sort of able to help at the time with what they actually needed, and they were interviewing a bunch of different firms. And I think there was a combination of reasons they selected us, but mostly it was because of how full service we are for them specifically.
Okay, great, great, good. And you do a lot of referral work now as well? Is it mostly referral?
We only work by referral at this point.
Okay, very good. Well, good. Well, you built a great practice, and it's really been great to talk with you. I think we're coming to the end of our time. You have the floor, Megan. There's going to be obviously a few hundred advisors, and then over a period of time, a few thousand advisors will see this, and maybe a few clients as well. So you have the floor. Imagine you're in an auditorium and they're all there. What would you like? What message would you like to give to our industry about how to succeed in this business? Is there any overriding thought you can give to folks about how to succeed?
Yeah, it's been a really interesting journey for me. Starting at I told the story at the beginning, starting in such a tumultuous time. Um, and I think what that going through my experience has taught me, and the background before I even became, a career woman, is that you just have to put in the hours. You just have to if you think you should be doing something, just do it. If you're thinking about a client and think you should call them, pick up the phone and call them. Um, one of there's 2 things clients that have stuck out that clients have said to us, when they refer other clients to us. The most consistent introduction is that they wish they would have met us sooner, and that's the greatest compliment that we've received from clients is when we get that type of referral. And the other one-liner that a client has said to me that has stuck with me forever is that 10 years of hard work makes you 10 years of hard work makes you look like an overnight success. And I think that has been my experience in a lot of different areas of my life, but, specifically my career. I started as a junior partner, and now I am an equal partner, and, have been able to figure out how to navigate running and operating the firm and just continuing to design it in a way that we can grow successfully. So, I think just consistency and simplifying processes and really believing and implementing what you believe in philosophically has, it's the people see it
Yes.
and they'll continue to come to you for the same service.
And I can tell what people trust you. You're steady, you're solid, you got great ideas, you're very focused on success and building, and it's really great to meet you. And thank you for being with us today on the Financial Advisor Workshop.
Yeah, thank you again for having me. It was a pleasure.
All right, appreciate that. And thanks everybody for listening to today with our discussion with Meghan. We're going to be back again with another financial advisor very shortly to learn from, and we'll leave it there. The Financial Advisors Workshop for today is over and out. Thanks everybody.
Thank you. Bye.